Good morning to all and welcome to our webinar, Innovating on Tradition, Scotland's Global Investment Opportunity. Before I start and introduce myself, I'd like to thank the many sponsors of the Financial Services Club who make these webinars possible. So, hello, I am Dr. Kevin Parker. I'll be chairing the webinar today. I'm the Science and Economics Advisor to ZN, based here in Edinburgh, Scotland. In this role, I recently completed a report on Edinburgh and Glasgow's position in the Global Financial Centres Index for Sandy Begbie, our speaker, and his colleagues at Scottish Financial Enterprise. Alongside ZM, I've had a lengthy career in technology transfer and tech startups across a range of scientific disciplines. Currently have a position of entrepreneur in residence at Heriot-Watt University. Much of this work has been in the Scottish tech startup cluster, and I'm very interested in drawing together Scotland's strengths in technology and finance. I'll be handing over to Sandy in a moment, and he'll be speaking for about 15 minutes, after which we'll have a further 30 minutes or so of questions. The webinar is being recorded, and the link to view the webinar will be sent to all the attendees here today. Thank you. Sandy, over to you.
Thank you very much, Kevin, and good morning, everyone. If you're in this time zone, good afternoon. If you're further east, delighted to be speaking at today's webinar, which is focusing on Scotland's financial services sector, specifically around our long heritage and tradition, but also how we are reshaping our industry to compete globally in what is a very different world from what we've been in the past. I thought I would just start with some interesting stats. Bank of Scotland was founded in 1695, which is one of the world's oldest banks. The Royal Bank of Scotland was founded in 1727, and its 300th anniversary is coming up next year. Standard Life was founded in 1825, and at one point was the largest mutual insurance company in the whole of Europe, and from my own experience was also the first overseas company to write an insurance policy in China. And Scottish Widows was founded in 1815 and is now part of Lloyds Banking Group. And we're all used to these days, maybe slightly less so of course these days, but using cash. But the first cash machine was invented by a Scot, John Shepherd Barron, in 1967, and obviously became an invention that was used and continues to be used across the entire world. So Scotland has a long history and heritage in financial services, and that has shaped financial services across the globe for many, many decades. But the world, of course, has changed and changed significantly in terms of how we think about financial services. And therefore, in Scotland, our industry has changed shape over many years. But we continue to be the largest sector in Scotland, contributing over 17.5 billion GVA on an annual basis, which is about 10.5% of the Scottish economy. We also employ around about 151,000 people across every area of the industry, whether it be in early stage investment companies, right through to asset management companies, big life and pensions presence, banking, wealth management, etc. And we also have a very flourishing Fintech cluster here in Scotland, with around 230 Fintech businesses who have chosen to come here from across the globe to access the expertise and the talent that we have here, and particularly connected to our university sector, with Scotland having 3 of the world's leading universities in the top 150. So we do have a very strong ecosystem and a long heritage. But round about 2.5 years ago, we decided as a sector we really needed to try and think about what the next 5 years or beyond would look like for our industry. And one of the first things we started was to benchmark ourselves against other centres. And I guess we found 4 key themes that came out of that. We deliberately chose centres that we were close to on the GFCI index. And as I say, we found probably 4 key trends that were really important to us as we considered our future. In no particular order, first of all was innovation, universities, fintech, having strength in that capability and having a strong fintech cluster was going to be really important. So firms would think about coming and basing themselves in Scotland for that reason. Secondly was a real strength in data and AI. Again, obviously people on the call will understand the importance of that for our industry going forward. But having what really came through strongly was if you do not have a strong capability that can compete globally, then you will struggle to maintain your position as a global financial centre. Fourth was around talent, and of course firms are really looking for strong beds of talent, and having 151,000 people already employed and a strong university sector here in Scotland allows us to have a strong pipeline of talent coming into our industry. And then the final point was a key theme around regionalisation, where businesses were looking to consolidate what might be a number of different centres into a larger centre. And I'll say a little bit more about that in terms of what we've seen here in Scotland, but that trend around reducing the number of centres, but also a mixture of nearshoring and offshoring. So we've also seen firms choose to move jobs and responsibilities out of, say, London to Edinburgh and Glasgow as a way of retaining the capability, and retaining it in the UK, but moving it to a lower cost base as a result. So that sort of regionalisation, nearshoring, offshoring was still part of sort of location strategy. We then complemented that with a whole series of interviews, so benchmarking interviews. We did workshops across our membership, and out of all of that, we produced a sector growth strategy. And like most good strategies, it can be easily summarised in one diagram. So Lucas, if you could bring up the next slide. And I'll just take a few minutes just to walk through this particular slide. And for the ease, I'll start at the bottom and work up. I've already touched, and this was basically the outcome of all that research that we did. The bottom level is the foundations. So the strong foundations, what we were hearing about Scotland was our global heritage in certain parts of the world continues to carry a high degree of credibility, a high degree of influence on businesses, and in terms of how they look at Scotland as a financial services centre. So that heritage is something that we probably take for granted here, but we should do more to leverage and dial up in our communication. Secondly is Scotland, again, partly because of our universities, partly because of the size of our sector, is highly regarded for its human capital base. And as firms continue to look to access the very best of talent, then again, that's something that we should probably strengthen in our narrative. And then looking forward, there was a recognition that Scotland also had specific capabilities in data, AI and emerging technologies, partly because of our fintech cluster, but also partly because of the universities, and also part of our long heritage in this area. Edinburgh University, for example, has been one of the world's leading data universities and AI universities for over 50 years. They slightly tongue-in-cheek say that people are now talking about data and AI, but they've been talking about it for 50 or 60 years. The next level up was we are also recognised and respected for having a very deep expertise and having a very mature ecosystem. And that, in some ways, that maturity of ecosystem is a reflection of our heritage. But whether it be banking, wealth, asset management, life and pensions, professional services, Scotland has real strength and capability across all of those areas, and pretty much in equal measure. So while other centres may have a particular focus on one element of that, we have a very strong ecosystem that cuts right across all those core parts of our sector. What that means then is if you choose to come to Scotland and locate in Scotland, then everything that you need to establish a footprint or grow a footprint in Scotland is already there and well established. But in some ways, the key question for the work that we did on the strategy was around where are the areas that Scotland could really potentially grow in the future. So in other words, banking, wealth, life pensions, professional services are obviously all key to our ecosystem. But what are the areas that we could really compete globally and seek to grow even further across our sector? And they fell into three key areas. Fintech, which I've already touched on, is a very flourishing fintech cluster. It's the largest outside of London and one of the most respected in Europe. Secondly is green and sustainable finance. Scotland has huge natural resources, particularly in the sustainable energy area, whether it be in terms of wind farms, whether it be in terms of hydro, whether it in terms of some of the innovations that are happening in the hydrogen space. And that whole transition from fossil fuels to more sustainable energy is an area that obviously requires finance. And Scotland's financial services industry is uniquely placed to support that. Just to put that in context, Scotland's coastline has the world's largest capability for offshore wind anywhere in the world. So the finance sector's opportunity to fund that transition was very real, and for us to really influence how other countries and other parts of our sector globally think about that green and sustainable finance. And then the final area was around asset management. Scotland has a long history, as it does across other areas, of being very innovative in the asset management area. To be honest, the last 10 years have been a challenge. We've had a lot of consolidation in the industry, so a number of our active managers in particular have reduced and consolidated. And as a result of that, our AUM, for example, has also reduced. And obviously the attraction of Tier 1 centres for asset managers is very real. But we continue to have all the core foundations that you require to be a successful asset management location. We've got excellent universities, we've got a really excellent way of life, we have excellent schooling and private schooling, and we also have that bed of talent that supports as a result of our long history of competing in the asset management area. So with the right focus and with the right plan, then we felt as though we can also reverse some of the trends that we've seen over the last 10 years. And we've also seen a real growth in asset servicing in Edinburgh, in particular in this case, where Edinburgh has become a very strong location for asset servicing companies. So we've got excellent firms like State Street, BlackRock, we've got BNP, we've got Citi, just to name a few, who are all got large footprints here in Scotland. As a result of that, we did a separate piece of work around our asset management strategy, and that was published back in May. And we provided a short piece and a link in the GFCI newsletter back in July. And then the final piece was we had never really considered how we market ourselves in an effective way to the rest of the world. So that establishing a globally recognised brand, which is still work in progress, is one that has been hugely important for us, recognising that we are in strong competition with a number of other world-class financial centres. The final component, I would say, of the strategy is that we also took what a lot of people thought was quite a courageous step, and we were quite clear about the targets that we wished to set, in which we would measure the effectiveness of the strategy. And one of them was the positioning of our two main centres on the global financial centre index. When we started on this journey, Edinburgh has consistently been in the top 30 for a very long time. And in fact, if you go back far enough, would have been in the top 15 and now occupies the 29th place. Glasgow has been a real success story where I've been in this job for 5 years, we struggled to make it into the top 80 for Glasgow, and now we're now positioned in 32nd place on the index. And that's been as a result of some of the themes I've just talked about. We've seen huge investments in Glasgow from Barclays, for example, who only a decade ago had little or no presence in Scotland other than some branches and some corporate finance activities, and now has a full campus in Glasgow, employing around 6,500 people. JP Morgan have, just in the last 12 months, have opened up their European tech headquarters in Glasgow, a whole new campus employing just about 3,000 people. And then Morgan Stanley, who have been in Glasgow now for 25 years, have steadily built their profile and their footprint in Glasgow to a point now where they have about 2,500 people. And of course, those big investments then attract other parts of the wider ecosystem to Glasgow, in particular professional services, the consultancy firms, lawyers, etc. So Glasgow has been a huge success story, and Edinburgh has continued to maintain its strong position. And just to put that in context with respect to the rest of the UK, there is no other financial centre in the UK other than London, obviously, which occupies position number 2. There is no other financial centre in the UK in the index. And I think that then speaks very highly and strongly of Glasgow and Edinburgh as being very strong global financial centres. Secondly is obviously measure our economic value add. When we started on this journey, that number was around about 14 billion. We set a target of getting to a minimum of 17 billion with a maximum up to 21 billion, and we're now just above that 17 billion mark. So we've seen really strong growth in the economic value. But we've also focused on headcount, but also probably more importantly is our GVA per employee. So given the uncertainty around the impact of AI on job numbers, etc., we have predominantly placed economic value as the #1 measure, and then based on the number of jobs, then we've got a GVA per employee number that's attached to that particular measure. We also measure foreign direct investment using the EY report that comes out annually that has highlighted that Scotland continues to perform outside of London as the strongest region in the UK for foreign direct investment. And we also use the other measures as part of GFCI to measure things like green finance index, but also the fintechs as well. And we also measure investment into a fintech cluster here in Scotland, which has continued to increase year on year. If we move on to the next slide, Lucas, we have a huge opportunity to further place Scotland on the map as a global financial centre. We are running in partnership with the City of London Corporation, Scotland's Global Investment Summit, which will be held on the 6th and 7th of October. On the slide, you can see the objectives of that particular summit. It's really about placing Scotland as a location, an investment location on the map. We'll aim to bring around 100 to 120 investors, not only from the UK, but from across the globe. And we will showcase 3 particular sectors: financial and professional services, which will include fintech, renewable energy, and then also life sciences. And these are 3 growth sectors here in Scotland, and have been on a positive trajectory for a number of years now, and really provide the opportunity to reshape Scotland's economy over the next few years as they continue to grow. So obviously, as part of the Investment Summit, we'll be showcasing much of what I've already spoken about, and we'll be taking the opportunity to showcase some of the case studies I've mentioned, but also some of the investment that we've seen here in Edinburgh with BlackRock, for example, who just opened up their new campus in Edinburgh just back in May. Edinburgh was their first location outside of the US, and once it's fully staffed, it will have around about 1,600 people, which will constitute one of the largest centres outside of the US. But most importantly, It will be their only centre out in the US, focusing in on research, data and AI and how it affects the investment industry going forward. And just before Christmas, Lloyds Banking Group announced a further 200 million investment into Edinburgh to completely renovate their significant presence that's already here, but also to increase the number of jobs, particularly in areas like tech and data and AI, as they continue to increase the size of their footprint here in Scotland. To put that in context, Lloyds Banking Group, currently the largest single area for employment is here in Edinburgh, with around about 12,500 people employed in their offices here. And then, of course, you've had asset management firms like Baillie Gifford and Aberdeen, who have continued to consolidate and grow their presence here in Edinburgh, as well as we're still proudly the headquarters for NatWest Group, as again they've changed shape over recent years, but they continue to employ around about 12,500 people here in Edinburgh directly. So with that, hopefully that gives you a sense of what we've been doing, the strategy that we are embarking on. In the document, which we can circulate, there's a series of actions that sit behind that in terms of what we're doing to deliver against the growth strategy. And as I say, we've got a unique opportunity at the beginning of October with the Global Investment Summit to really showcase Scotland as a location for not only financial services, but for energy and also life sciences. So with that, Lucas, I will I'll conclude my sort of formal keynote, and then we can happy to take any questions, or Kevin, you also have any additional points to make, given you did an excellent piece of benchmarking work for us, then please feel free.
Okay, thank you very much, Sandy. We'd now like to accept questions. On your webinar software, you have in the top right-hand corner a little speech bubble with a question in it. If you put your questions in there, we will make sure that we address them all. Sandy, I think I'd like to sort of start off by asking a question about what is, not just the financial sector, what is Scotland as a whole doing to attract investment?
So I think in terms of what Scotland as a whole is doing, I mean, obviously, the strength of the financial services sector here helps with the supporting investment into businesses. We've put a lot of effort in recent years into significantly increasing the number of businesses, start-up businesses in the university sector. We've seen some real traction there, and we've seen a significant increase in the number of spin-outs from our university sector. It's not where we want it to be in terms of numbers, but it's on a very positive trajectory. And as a result of that, then we've been more successful in funding those businesses as they're spun out of universities. We still have work to do about retaining those businesses here in Scotland and allowing them to grow, to be obviously significant employers and successes in their own right. We obviously in Scotland, a lot of people refer to Skyscanner as being a great example of what's possible. And you know, it would be great if over the next few years we can see more Skyscanners coming through in Scotland. But there's been a real focus on encouraging more startups in university, more spin-outs, funding, and the next stage is how do we retain more of those businesses here in Scotland, because at the moment some of them need to go and source their funding from elsewhere.
I see that Lucas has posted a slide of mine. I spoke at the Young Company Finance Conference a couple of years ago. I'm just giving us some numbers, but there's been around £6 billion of total investment in startups since the year 2000. And by 2022, this was approaching 900 million, nearly £1 billion pounds of annual investment in startups in Scotland, not just fintechs, but biotechs, green techs, and associated companies. Okay, I have a question from, which is germane to this, from Robert McDowell. My father did a degree in chemistry at Glasgow pre-World War II and went south to become a successful industrial chemist. He never returned to Scotland. How do we retain native talent, or is the focus to encourage talent from elsewhere?
It's a great question. I think that Scotland, Edinburgh, Glasgow have some of the most educated workforces anywhere in the UK. What we do find is that students that come to both those cities from overseas quite often wish to remain in those cities. There's obviously been a lot of focus on immigration policy in the UK of late, which in some cases makes that more challenging as once those people graduate from universities, but firms are determined to look to retain people who have come here to study. In terms of our own talent here in Scotland, there is no doubt that the current funding regime of Scottish universities makes that more challenging, because some of our brightest and best can't get places at Scottish universities. So we're lobbying hard to the Scottish Government to think about some practical changes that would allow as many of our talented young people to remain here as possible. On a more positive note, we at SFE are working very closely with a number of universities and colleges who predominantly support our industry, so mainly in the Central Belt, and specifically around the curriculum, the programmes that they've got, the qualifications they've got. How do they need to change to reflect the needs of our industry going forward? How do they need to align with our own skills strategy that we have here at SFE for our industry over the next 5 years? In which case, how do we make sure that our industry, given our size and scale, is then reflected in how universities engage with employers, etc. So, and they're very open to doing work with us around that particular agenda. And as a result, then we start to see more young people going into colleges and universities with a focus on financial services. The final piece I would say is we've also designed and launched our own platform into schools, which we did in the last quarter of last year, called Get Into Finance, which is a platform that, once it's fully rolled out, will be in every secondary school in Scotland, and that aims to promote our industry to young people. It aims to be clear on the type of skills that we need in the future, and also the pathways into our industry. So we're also trying to widen the pipeline of people coming into our industry from school, as many firms these days are doing apprenticeship programmes, school leaver programmes, and also as well as bringing young people in on graduate apprenticeships, and then as well as obviously graduates themselves. So really trying to widen that pipeline out as well of young people who are interested in our sector in order to retain them here in Scotland.
Great, thanks, Sandy. Lucas, if you could put up the third slide from my pack just briefly. Yeah. So broadly, where we see money going into Scotland is investment in startups. We see exits of those startups, which at a rough estimate could be around 5 billion a year. And I think where we don't do it quite as well as we could is, are we getting Scottish investment at that stage? So at the stage of the growing company, is there a gap in finance there? There's an opportunity for Scotland. If there's £5 billion of value going into exits in tech companies in Scotland, then already that's putting the tech cluster bigger than something like the whisky industry. So I think the answer, Robert, is it's not perfect, but we're working on it. Good. I'll just move on to the next question. This is from Hugh Purser. Sandy, you've referred to the global context, but haven't mentioned relationships with the European Union, especially in financial services. Could you expand on your future strategy here, please?
So, coming into this role, having spent most of my career in the industry, I've been asked many times as to the impact, particularly Brexit, on financial services here in Scotland. The reality is that it is far less than it has been in somewhere like a tier 1 centre, namely London. The reason that is if you think about our ecosystem, our banks and our life and pensions companies and our wealth businesses and many of our professional services businesses, while global, they predominantly have UK-focused operations here in Scotland. Our asset management businesses are obviously one who Brexit did impact, but they've long since taken the appropriate action to whether it be offices in Luxembourg or Dublin or elsewhere in order to mitigate that. So we haven't seen as big a direct impact on that front as others. If you then think about where our growth has been, then particularly with the big US banks coming into Scotland, where now that they are employing a significant number of our total headcount here. The reasons are here is predominantly in the back office, middle office, and also in the research innovation space, which again they can operate quite successfully here in Scotland, which they may not be able to do elsewhere. So the impact of Brexit here in Scotland has been, in our industry, has been significantly less than it would have been, for example, in London.
And good, and we have a follow-up here. To what extent did the growth in Scottish nationalism in this century help or hinder economic growth in Scotland? I'll give you that one. It feels a bit like a loaded bomb to me, but
I think
Kevin,
I get asked this a lot. I think that I was at Standard Life in 2010, 2019, and obviously the independence referendum was conducted in 2014, and that was obviously firms were looking at very carefully and taking appropriate planning to think about what would happen if that did occur. Obviously it didn't. For the following probably 6 years or so, 7 years, leading up to COVID and then probably coming out of COVID, there was a real continued drive around the independence agenda, which undoubtedly caused a lot of concerns in our industry in particular, where I've mentioned banks, life and pension firms, etc., being based here in Scotland. The reality is that probably over about 90% of their customers were based outside of Scotland in the UK. So again, all those firms were making contingency plans. If there was a further independence referendum, then how would that affect? And that did definitely affect some of the plans and the longer term investments, the risk of that. And therefore, if you looked at a risk register up until the Supreme Court ruling, which was in November 2021, the risk of independence on a firm's risk register would have been quite high, and the impact of that would have been very high. With the Supreme Court ruling, which made it quite clear that the Scottish Government were unable to conduct any form of referendum without explicit permission of the UK Government, then the risk of that has reduced significantly. So there may continue to be some noise, but from a firm's point of view, bluntly, no one talks about it anymore, because it's at the moment it's viewed as something that is a way off in the distance, if ever happens, because of the Supreme Court ruling. So obviously there's a political overlay to that, but the reality is that some of the investments I've just been mentioning to you have all happened in recent years, so that hasn't directly affected, and of course it hasn't affected the foreign direct investment numbers that we're seeing, which is the largest outside of London. But I would be lying to say that if that came back onto the agenda and there was a potential risk attached to it, then firms would likely reflect that in some of their investment decisions. But for the time being, it's in the low risk category.
Great, thank you. And we have a question from Shane Drinian. Is sustainability and ESG still going to be a focal point in Scottish finance in light of the pullback that we've seen within the broader financial community? And I would imagine the questioner is particularly thinking of some events and attitudes from the United States in that question. So sustainability and ESG.
Yeah, there's two sides to that. I think that one is, in some ways, I was in the US actually back in April, and we had a roundtable with investors, particularly investors focusing in on climate transition investments, and clearly the changes that have been announced by the President meant that many of the projects in the US had either been stopped or curtailed or unlikely to go ahead for the foreseeable future. So actually investors were quite open about looking for elsewhere in the world to invest their capital, given their primary purpose as funds and investors was climate driven. So in some ways, this could actually potentially present an opportunity, and the Investment Summit deliberately has a key focus on the energy opportunities that exist in Scotland. So the industry continues to work hard to fund that research and innovation in that space. But there is no doubt, if you talk to the asset managers, then across the globe and in particular areas, particularly in the US, then that has directly impacted their ESG type operations. And their focus on that particular part of their strategy. But in terms of in Scotland and the opportunities that exist, we've recently had approval for the world's largest offshore wind farm, just off at Berwick Bank on the east coast of Scotland, and that's just been given full consent, and work will start on that imminently. So there's still funding available, it's still flowing into these projects. These are long-term investment projects, and so we start to see some of the challenges in the asset management space, but actually for some of the funders, then those opportunities still exist.
Thank you. Yes, I see Lucas has put up one of my slides. Basically, if Scotland can't do it, who can, in terms of our resources in tidal energy, of wave energy, solar energy. People forget that we have 15 hours of daylight, 18 hours of daylight in Scotland. And there's also a picture there on the top right of the Crooken Dam, which isn't just a hydro scheme, it's a pumped hydro scheme. So one of the crucial things in our electricity industry is electricity and energy storage. And pumped hydro is one of the few routes to that we have at the moment. So yes, if Scotland can't do it, who can, is a point I've made in the past. Going on to the next question, we have a question about devolved tax raising powers. So Scotland has some devolved tax raising powers. I was interested, it's very recently though I discovered that Scotland does actually have the ability to borrow at least comparatively small or significant amounts on the international markets should it choose to do so. So could these devolved tax raising powers and powers that the government has at the moment be creatively deployed to encourage early stage and other growth?
I think that's a really good question. I mean, the borrowing powers are very limited. I think it's about 500 million, and I think a lot of that is already being used. I think the broader point about tax in Scotland I would make before I come on to the specific question is the devolved taxes here in many ways can create a bit of a barrier to investment, particularly as it relates to people coming and living here, because we've got higher levels of income tax and it costs a lot more to buy a property here in Scotland than it does elsewhere in the UK. So there's some anecdotal evidence that would indicate that particularly senior people, trying to get them to move to Scotland is more problematic unless you're prepared to offset some of the income tax impacts, which can be quite significant versus the rest of the UK. So that tax devolving power has, I wouldn't say to date, has been a benefit for us, and we've had a very public campaign around the need to halt that divergence, which has happened, and if anything then to realign taxes with the rest of the UK. Your point about devolved taxes, there's certainly been a long conversation over a number of years about whether or not the Scottish Government, they do have the opportunity to issue bonds, and particularly around green bonds and the opportunity to raise money for some of the projects that Kevin just mentioned, and that's something that I know that the Scottish Government have been looking at over a period of time. Clearly that sounds quite attractive in principle, but the reality is Scotland has no track record of issuing bonds, and therefore the cost that would be associated with that would probably be quite significant. What we have been doing, however, is trying to encourage more funds to focus in on Scotland and to recognise Scotland's opportunities in this space. So we have seen an uptick in interest in some of the spin-out businesses in Scotland, but we've still got a way to go on that, and that's part of the reason for the summit as well, is to showcase opportunities in Scotland.
And I have a question. A question about power again. Do we think that the blanket ban on nuclear power will come to an end? It seems rather self-defeating. I think that's referring to the present Scottish Government's policy of not encouraging nuclear power. And my initial comment on that was that may be susceptible to change. But what we should remember about nuclear power is, whatever we think about it, it does take a lot of time and a lot of money to implement nuclear power, especially when compared to other forms of renewables. But Sandy, I'll let you continue on that.
It's probably quite a quick answer. We've got an election next May, Holyrood election. The current administration has been quite clear that there will be no change in their stance on nuclear power. If they remain the party in power, depending on how the seats fall, then I don't think there'll be much change in that position. But likewise, we could have a very different administration come next May, and given the support among some of the other parties for nuclear power, then that may well result in a change in position on that. As you say, Kevin, it's a long-term investment. However, Scotland clearly has a very talented skill base as a result of the existing nuclear facilities that we've got here. Trade unions are quite vocal about the fact is that skill base, once it's gone, will be lost forever. I think that Scotland's losing out on potential investment opportunity as a result. But I don't expect any change until we get past the election next May.
And what might turn out to be the final question, unless anyone likes to submit some more. Here's an interesting one. Scotland has a world track record in producing high quality meat, vegetables, fruit, and food products. Do we see opportunities for investment in these kind of areas, in improving traditional agriculture, in investment in premium products? Something I've not thought about so much.
So we do a lot of work with other trade bodies, so we have a lot of dealings with people like Food and Drink, the Scottish Whisky Association, etc. And obviously whisky has been a big success for Scotland in terms of its own development and exports. And the First Minister this week was over in the US trying to have the tariffs that were introduced reduced or removed on whisky, given the impact of those tariffs on our whisky exports. There's no doubt our food is viewed as world class. This is where Brexit has definitely has had an impact in terms of the red tape attached to exporting goods to the EU has become very significant, and the costs associated with that are very significant. So I think that's, if anything, has had a negative impact for us. But the other thing we shouldn't forget is that over 60% of Scottish food and drink is exported to elsewhere in the UK. So it's still, the rest of the UK is still by far and away the largest market for Scottish produce. The free trade agreements that have been signed potentially provide opportunities for the food and drink industry, and particularly with India, there's a huge opportunity given the size of the mass affluent market. And the opportunities particularly for whisky as a result, given the significant tariffs that were in place before the free trade agreement was signed.
I'd like to thank Sandy for an interesting presentation. I'd like to finally thank all of our sponsors, and that this video will be available, posted to YouTube, I believe, and there'll be some more questions that might be posed and answered in those documents. I'll just note that there There are some forthcoming Financial Service Club events. And finally, I'd like to thank everyone for attending, and Sandy again for the presentation.
Thank you very much.
Thank you.